Happy Sunday, everyone. I need my light. Well, I am getting ready to go to the Usher concert. So I figure while I'm getting dressed to go see Usher, see what Usher's talking about, I figure we can kind of go over some common business mistakes. Who's even playing in the game? It's kind of like, I have been so removed from sports for a while. I don't even know who's playing. I just know that Usher is going to be performing. I mean, it's not Beyonce. It's not a Beyonce, but Usher will do. Usher will do. So, common business mistakes that we don't need to continue making. Number one would be, we want to make sure that we have an active LLC, right? So forming your LLC is going to be the first step, but now we have to keep our LLC active. So a lot of times we'll forget to file our annual report. That's going to be the report that the state requires you to file to keep your LLC active. So forming it is one thing, keeping it active is another. If you let your LLC go defunct or become inactive, it's like you don't have an LLC. So that protection that you get, the asset protection, the separation of your assets, that does not happen if your LLC is inactive. So to put it in simple terms, if you forgot to file your LLC report with the state made your LLC inactive, and then let's just say you had a lawsuit, you had a contract dispute with a vendor, you have a lawsuit, right? Well, if when they filed the lawsuit, when they track back to the Secretary of State and it shows that your LLC wasn't active on the date of that lawsuit, well, then you didn't have an LLC. So that means that your home, your car, the money in your bank, your personal assets are now up for grab because there is no more asset protection because on the date of the lawsuit, your LLC wasn't active. So you didn't have an LLC. So entities, meaning LLCs, corporations, that's at the state level. So you want to make sure some states require just an annual report to be filed. Other states will require an annual report and a fee to be filed. Whatever it is, you need to make sure that that's done so that you keep your asset protection. The reason why this, even if you have done no business with your LLC, it just sat there, you didn't make a dime, you still have to file that report. That report lets the state know that, hey, I am using this LLC still. They need to know that because if you're not using your LLC, then they're going to put your name back up for grabs for another LLC to be able to call their business by your business name. So even if you've done no business, your LLC didn't make a dime, the paperwork just sat, in your office, you did nothing with it, I didn't charge my lights, y'all. You still have to file that report with the state to let them know, hey, state, I am still using this LLC name. Please reserve my name. Please keep my LLC active, okay? A lot of times we think, well, I haven't done anything. I didn't make any money off it, so why I got to do anything? That's why you got to do something, because you're letting the state know that you're still using the LLC name and you still want that LLC protection. If your LLC is inactive, meaning you did not file your report and you want to reactivate it, you need to go contact whoever is the department that's over that. Sometimes in some states, it will be the actual Secretary of State. In other states, it'll be another governmental entity. Like in Texas, it'll be the Texas Comptroller's Office. And you want to find out what years of reports are due and then what is the fee to reactivate that LLC. And they will let you know what forms got to be filled out, and if you have a late fee, a penalty, whatever that is, and you just pay that, and then now your LLC is active. Now, depending on how long your LLC has been inactive, or depending on how popular your name is, when it's time to reactivate your LLC, your name may be taken. So now you have to, you're going to have to change your business name. So I always tell people, baby, just keep the LLC active. Even if you're not using it, one day you may use it. You may use it for a holding company. You may have a business. Once you form it, like unless you're in California where the annual fee is $800, that is a lot if you're not going to do anything with it. But for the most part, the annual fee is going to be, some are like going to be $50, some will be $100. It's normally a nominal fee, but it's protecting you. So I always advise people just to keep the LLC active. The report is going to be due on all different types of due dates. So like in Texas, it's going to be due on May 15th. Some states have it to where it's due every year at the same time. Other states will have it due on the same day, that you formed your LLC. So you formed your LLC on January 15th, and your report is due every year, January 15th. Some states don't require a report to be filed every single year. Some states will allow you to do, it's called bicentennial, where you file the report every 2 years, right? But whatever the case is, you need to understand what your state requires. So the first mistake people make are going to be having their LLCs be inactive and they're still doing business, so they don't have the asset protection that they need. And so if you were to get hit with a lawsuit, basically you're exposing your personal assets. We don't want that. Now, the whole point of us forming this LLC was to protect our assets, okay? I am doing a free masterclass on Monday at 9 p.m. Eastern Time. I'm going to be going over business structure, how to get funding for your business that's not based on business credit. Not based on credit. I'm going to be going over the contracts you need for your business. And I'm also going to be going over marketing, how to market your business. So if you feel like you need any of that and you're on my Instagram page, just comment bank in the comment and a link will be sent to you. If you're watching on YouTube or TikTok, click the link in my bio, the first link, and you'll get the link to be able to register to the to the class. Live Masterclass. Okay. So the first mistake was having an inactive LLC. A second common mistake is going to be everybody wants to have this S Corp. I want an S Corp. I want an S Corp. I want an S Corp. Because they done heard somebody on Instagram talk about all the benefits of an S Corp and this and that and that and this, and that is not a lie. There are some tax benefits to an S Corp. Number one, in order for you to benefit from any tax benefits, you have to first owe a tax. So if our business is pre-revenue, that means we haven't made any money, well then you shouldn't be concerned with any kind of tax benefits because you don't have any profit. You only pay taxes on your profit. So if we haven't made any money, any kind of tax benefits that a certain entity gives you, you're not going to receive that benefit because you don't have any taxes. Now, the biggest misconception is that an S Corp is an entity. We don't form an S Corp. Okay, you can't go to the Secretary of State and form an S Corp. There is no such entity. You can form an LLC or you can form a C Corp. Business entities are formed at the state level. Okay, I'll say it again. Business entities are formed or created at the state level. Now, how an entity is taxed, that's at the federal level. Okay? So, forming the entity is at the state level. You have two options. You can form an LLC or you can form a C Corp. A partnership, you don't form that. A partnership is two people doing business, exposing their assets, okay? A sole proprietor, you don't form that. That's just one person doing business, exposing their assets. You don't want to be a sole proprietor and you don't want to be a partnership because you don't have any kind of asset protection. So the only two entities that you can form are going to be an LLC or a C Corp. Well, okay. Certain professions are not allowed to have an LLC. So attorneys can't have an LLC for their law practice. Doctors can't have an LLC for their medical practice. So certain states say, hey, certain professions, certain people that have a certain license, they can't have an LLC if they're going to be doing business with that license. So they're required to have something called a PLLC or a professional limited liability company, okay? But those are going to be the two things we're forming. We're forming an LLC. If you're a doctor, a lawyer, I think a psychologist, those kinds of degrees, you may not be able to have an LLC and you'll have to form a PLLC. But we're only forming an LLC or a C Corp. Now, both an LLC and a C Corp, they don't have the best tax breaks, okay? So if you have an LLC for tax purposes only, you are considered a sole proprietor, meaning the IRS is going to tax you the same as they tax a sole proprietor, okay? If you have a C Corp has something called double taxation, meaning you get taxed when the business makes money and you get taxed when you distribute that money to the owner. So that's considered double taxation. An LLC or a sole proprietor, they have a self-employment tax. So whatever are your profits, you're going to pay a 12.4% self-employment tax. That's going to be your FICA, that Medicare, Social Security, all that good stuff.
Is Hannah coming with us?
Hannah is coming with us. Okay. So both entities don't have the best tax option. So the IRS says, hey y'all, if you are one of those entities, but you want a better tax option, you can elect to be taxed as an S Corp, okay? So, if you're taxed as an S Corp, you're still an LLC, you are still a C Corp, but for the IRS purposes, they will say, well, we'll let you have a different tax break. So, if you are a C Corp, you're not going to pay that double taxation. If you are an LLC, you don't have to pay that self-employment tax. But there are requirements to be an S Corp. Number one of the owners has to be on payroll, okay? Meaning payroll taxes being taken out. Number two, if you are an LLC being taxed as a sole proprietor, the regular tax election, you're going to file your business return on your personal return. So there is no additional business tax return that has to be filed. You're going to just, your business income and expenses will be filed on a Schedule C on your personal tax return or your 1040, okay? So your taxes for your business are going to be due the same time and on that same form as your personal tax return. Now, if you want to be taxed as an S Corp, an S Corp has to file its own tax return. Now, depending on the complexity of your return, the average business return is going to run you between $750 and $2,000. Okay, so you're going to have that additional expense along with the expense of having payroll. So paying ADP, paying a company to do your payroll, those payroll taxes being taken out every 2 weeks. So a lot of new businesses, we're just trying to, get our business going. We're trying to get customers. We may not be able to afford to be able to pay payroll taxes. So another common mistake is people hearing, oh, the S Corp, and jumping on to get an S Corp. Well, you have to remember in business, there are so many ways to skin a cat. There are so many different strategies that you can use. Business strategy and tax planning is not one size fits all, meaning everyone needs to have this, everyone needs to have that. You got to do what's best for you. So making an S Corp election too soon, or making the S Corp election and not following the S Corp rules. So you have to be on payroll to be an S Corp. So if you're not on payroll and you're on S Corp, you're an S Corp, you're being taxed as an S Corp, you need to be on that phone with that CPA, and you need to be fixing some stuff up. Either we're going to revoke our S Corp tax election, or you need to be on the phone with ADP, ExecuPay, QuickBooks, some kind of payroll company that's going to help you get on payroll, so you're following the IRS rules to be able to have an S Corp. Normally, the S Corp tax benefits don't come into play to actually benefit you until you're at about $50,000 to $60,000 in profit. That's how much you make in profit, okay? So if you are making $50,000 to $60,000 in profit and you're not an S Corp, you also need to be at that CPA's office making that S Corp tax election, okay? Now, I'll be going over all of that in my masterclass on Monday. If you guys signed up early on in the week, you should have got an email. I was going to do the masterclass tonight, but everyone was like, you don't want to compete with Super Bowl, so I didn't want to make y'all choose between getting y'all business together and watching Usher. So I moved my masterclass to Monday. So if you are interested in knowing, to make sure that your business is properly structured, how to get funding for your business, how to market your business, just comment bank in the comments and I'll send you a link. If your Instagram page is private, then I need you to DM me bank. If you're watching on TikTok or YouTube, click the first link in my bio to register for the free masterclass. Now, how much are payroll taxes? Payroll taxes is going to depend on how much you're running your payroll for. So it's a percentage. It's a formula. One, you have your payroll taxes that you're going to be paying, which is going to be your FICA, Medicare, SSI. Then you have your federal income tax, right? So whatever is your tax rate, whatever is your, you got to fill out a W-4. How many people are you withholding? All that good stuff. And that's going to be how much is taken out of your taxes. Okay, so payroll taxes, it all depends on how much money is coming out, what your income is, and what you elected as far as how many exemptions that you are taking on your tax return to determine what your payroll tax is. So if we are not ready for payroll taxes, then we need to not be an S Corp. If you are ready for payroll taxes, then you need to be an S Corp. Now, the benefit of being an S Corp, besides just the tax benefits, is now you as the owner, now you can get on payroll. If you're just an LLC, you cannot be on payroll, meaning you can't issue yourself a check. Well, why I want to issue myself a check? Because you're an employee of the business. It's so much easier to get financing when you're an employee of a business. Even if you own the business, you are playing some kind of role in the business. Anyone who owns a business is going to have a title, CEO, CFO. No one's walking around talking about, I'm the owner. Chairman, they all have a title, right? When you say, I'm the owner, well, number one, it makes your business sound small. Number two, when it comes to getting financing, now I'm talking about personal financing, right? You want to go get yourself a car. You want to go get yourself a house. If you say, I own a business, oh, well, now they about to put you through the ringer. They want to see all the business bank statements. They want to see how much, you're doing. It is a lot harder to get financed when you say I'm an owner, I'm self-employed. If you say, oh, I'm the CEO, I'm the president, I'm the chairman, I'm the CFO, I'm the vice president of blah, 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 and here are my paycheck stubs, all they're going to do is calculate your income based on your paycheck stubs. They're going to treat you like a regular employee, whether you qualify or you don't qualify. There is no extra red tape that you have to go through. Number two, you need to be having a position in the business besides an owner, right? An owner is not really a title. It's not a position. No one is saying owner. You may hear founder and CEO. You may hear chairman. But just look at all the big corporations. The owner of Kraft Macaroni isn't the owner. He's going to be the chairman, founder, and CEO. So you want to have a position with your company, and you get paid on that position, a paycheck. It's going to make financing so much easier for you. So those would be, I would say, not keeping your LLC active by not filing your report. Another common mistake is going to be making that S-Corp election too soon or too late. I got hit with a 6-figure tax bill. I made that S-Corp election too late. In my business, when you're running your business and you start growing, you're just in there trying to handle the growth. You're in there trying to make these moves. You tend to forget all the technical stuff. That's why it's important that you're always consulting with someone, your CPA or accountant. If you got a business, you are past Kiki's Tax Service, you are past H&R Block, you are past Jackson Hewitt. You got to have a CPA or an accountant. Every year you should be having a meeting with them. What am I looking at? What do I need to? Because when you have a big growth year, what are you going to do with that growth? If you don't talk to your accountant or your CPA to let them know, hey, I kind of did good this year. I'm thinking, with what I have set up, I'm probably going to be growing. They're probably going to give you some advice. Well, you definitely need to make sure that you stock up on inventory this year. So you can kind of write that off to kind of, reduce that tax bill. If you got to pay $50,000 out regardless, would you rather pay the IRS $50,000 or would you rather pay the IRS $10,000 and then you can stock up $40,000 in inventory? So you got to make sure that as you are growing your business, that you're getting counsel as to what to do with that growth, so all that growth doesn't get eaten up in taxes. Okay, so I'm having this free masterclass on Monday. Comment bank in the comments if you want to learn how to properly structure your business, how to get funding for your business, how to market your business, all that good stuff. It'll be tomorrow, Monday at 9 p.m. Eastern Time. I will post this. This lip isn't doing anything for me. I will post this live on my page. If y'all are already at the Usher concert and you want to watch it later, I will post this live on my page so you can watch them. You can really, concentrate and focus, okay? So everyone have a good Sunday, and I will, of course, see you at the bank.